This conference will now be recorded.
Good afternoon, and welcome to AI Answers, weekly updates from the world's leading valuation authority. My name is Bill Garber. I'm Director of Government and External Relations with the Appraisal Institute. Thank you for joining us today. We are going to talk about the use of trainees in the appraisal process. We're going to explore a particular loan guarantee program, the Veterans Administration Loan Guarantee Program, and some of the use of trainees and some of the issues that come with trainees use by appraisers or involvement with the appraisal process by looking at some data that has come to us from the VA and dig in a little bit and explore what may be going on with appraiser and trainee and lender issues in the current market today. Today with us, we're fortunate to have James Heaslet, who is the Chief Appraiser of the Veterans Administration Loan Guarantee Service, who's responsible for developing and overseeing policies and regulations for the VA Construction and Valuation Department. And also Pete Fontana, who owns Cornerstone Appraisal Services in Great Falls, Montana. He's also chair of the Montana Board of Real Estate Appraisers and a member of the Appraisal Foundation Board of Trustees. Welcome, gentlemen, and thank you for taking time to speak with us today and try to raise some awareness about an important issue on the trainee front. Why don't we go ahead and just jump in? There's some data that Pete and James had forwarded to us that's very interesting. It came from the VA on the use of the assisted appraisal processing program within the VA. And let me kick it over to James to talk a little bit about this program, what it involves, and how it has evolved this year and what the agency is seeing so far with it. So James, welcome and thanks for taking time.
Hey, thanks for bringing this up for a topic. We always appreciate all the work that AI does and the support that you've always shown VA doesn't go unrecognized. And I want to say thank you for that. That'd be a big miss if I didn't. You know, we were challenged when Congress passed HR 299 bill called the Blue Water Navy bill. And in there, it was a lot about funding and a lot about how we're helping veterans that were affected during Vietnam. And at the very last portion of this, they brought up appraising. And in there, you know, just how, as I'm sure you know, bills happen, they wanted the VA to allow appraisers to use someone else. And I think what they're trying to hint at is they wanted VA to go into a bifurcated world. And why I don't have any beef with bifurcated, I just don't think it fits well with VA. We have some very stringent requirements for our veterans. We want to make sure our veterans are taken care of. And so looking at how we're going to navigate this, what I did not want is to have an individual who's not licensed, not regulated, unknown, going into our veterans' homes. I just felt that that was more risk than what we're willing to take on and not the right way for us to go. So we created this kind of process. My team and I sat down, and we know we need specifically, like Pete, who covers in a rural area. We have a lot of rural areas that we wanted them to be able to have more help. And the bottom line is, if you're using another VA appraiser to help you, no one's at harm, no one's at risk. It's a better process, and we thought that made sense. Well, then why wouldn't we allow another appraiser? They're still regulated, they still have oversight, the state has oversight. We could find out who that person is. So that made sense. So then it came down to trainees. And this is where not all the states have a robust trainee process, but most do. And at some point, you just got to say you're willing to. So sometimes you got to move the ball a little. And I felt that it was important for us to try moving the ball, bring in the trainee in the process, because I was a field panel appraiser too. I was an independent fee forward. That's how I started. And I believe that was just the right thing to do for our industry. I think it's the right thing to do for VA. And it may not be right for every lender, but it was right for VA. And so Pete and I had a conversation, was almost a little over a year ago, about veterans outreach. And so when I started scratching my head thinking, this also ties in very well with veterans outreach. And so when we came up with the AAPP program, because, you know, government, we got to have acronyms for everything. So we introduced this program, and to be an honest broker, we needed the lenders to have some say in what their risk tolerance is. And so what we're seeing is, as it's a new program, we're seeing that lenders are responding well. We're seeing very few appraisers responding, but that's going to change. And it just allows the flexibility, the affordability for appraisers to service VA and service veterans with some flexibility.
Thanks for that intro. So this is a new product or new allowance, and normally in a non-COVID time, you might have had an opportunity to maybe educate the community about that. Have you been constrained at all so far this year on that front?
Yeah, so typically VA does a lenders conference every year. In fact, Greg Steinley showed up at our lenders conference last year. Found it very good. We're looking forward to him showing up again this year. Typically goes in April, May timeframe. Obviously, we did not have that, but we get about 600 people to sign up for it. So it's a fairly large conference where we get to go over our policies, get to go over our do's and don'ts, and help educate lenders. That would have been a great time. We were going to expand it to a lender appraiser conference. We were going to have a breakout sessions, and we were going to really start pointing to this program and say, the lenders who are screaming that appraisers take too long, then why aren't you allowing this? And then at the same time, educating appraisers, say this is a time where we could almost, I think, Pete, I think you said kind of dial back the clock. I think you told me where people can start acting like an appraiser firm again. You know, you can start managing more work, expanding your territory, grooming younger people that have a maybe darker hair color than I have into the industry. So we were really hoping to have that lenders conference, and it was a big miss that we couldn't do it during COVID, but it will come around.
Yeah, I would expect so. If not in person, maybe virtual type of an arrangement if we're still in this Zoom meeting format come next year. I'm going to go ahead and turn it over to Pete too. Turn to Pete. So Pete, you raised this with me, and I wanted to kind of get your impressions of this and what you've seen and uncovered in talking with VA appraisers around this particular issue.
Yeah, thanks, Bill. And I want to thank the AI for having James and I on today on this most important topic, because I think it has some potential to expand the trainee model, and makes it, there's some incentive now for mentors to take on trainees, because they're able to use a trainee and not have to go out in the field with them. So when James sent me this particular graph that we're looking at, I was actually fairly shocked that there was that many lenders that were participating in it. I thought it would be the other way around, where the appraisers would have participated in the process, but the lenders would have been apprehensive. And you can see, as the program rolled out on the graph that you see, the number of assignments has gone up, and the number of the percentage of lenders that are allowing it have increased as well. A little bit shocking to me was the number of appraisers that were using it, and so that troubled me a little bit. So I reached out to in central Montana. We're a rural market. We have difficulties getting appraisals completed in a lot of the counties, and so in central Montana, there's a large Air Force base and a large veterans hospital in another county, and so we accumulate about half of all the appraisal work that's done in Montana in those two counties, which I cover. And so I reached out, because there's a lot of VA panel appraisers in central Montana. So I reached out to some of these folks and asked them, why aren't you participating in this program? I mean, this is such a great deal where you can have somebody assist you. You can expand your territory. You can collaborate with another appraiser, take on a trainee, give some of this work to one of your employees. And the answer I got was, well, I didn't really understand how it worked. And when you get the assignment, you have to check, yes, I'm going to use the program, or no, I'm not going to. Well, if you don't check the yes box, then you don't get the illustration of what your options are. And your options are, you can use another VA panel appraiser that you're not even associated with. You can use another credentialed appraiser, or you can use a trainee that you're not required to actually go to the property on, but you do have to sign the right side of the report, which is the way it should be. And so the astonishing part was that they didn't understand the program and just checked no on that and moved on and did their assignment. And so I think there's some education that needs to be done at the appraiser level across America to have them understand. I think that having 40% of all orders that have been vended by the VA allowed to use the program is pretty remarkable. Of course, there's room for improvement to that. I would like to see it be 100%, but we can work on that. But we do need, it doesn't matter if it's 100%, if none of the appraisers are exercising the option to explore the possibilities of expanding their territory and then collaborating with another appraiser to get that work done. There's a lot of financial incentive for them, because you don't even have to take on a trainee, but you can expand your model, your work model, and take on more work and then share that expense. And of course, the fee structure, that's up to you, between you and the other appraiser. The VA won't engage in that. You have to work out how that fee is going to be split and whatnot. But there's some real possibilities for rural markets to expand the territory. And so that's the opportunity. And so then the challenge is how do we let all these appraisers know on the VA panel this is available and what they should be doing to increase their workload.
So that's going back to, in the past, sort of the appraisal firm model, if you will, an expansion of territory. So you're suggesting that for VA appraisers, they could be looking at this as a way to expand their company and the footprint of their company. And how would that look exactly, Pete?
Well, and after the mortgage crisis in 08, the concept of having a small firm kind of diminished, because it was like if the appraisal assignment came to one of my employees, and so I have a small firm, I have 3 appraisers and a trainee. When they get assigned it, they're the ones that have to do it. I mean, that's a real challenge, because I don't feel like I have any value to the firm where I can assign work, where I can expand my territory, where I can send an appraiser to make it cost effective to drive 300 miles to look at 3 houses rather than 1. And so it really encouraged me, because it makes me feel like I have some control about, number 1, helping our veterans get these appraisals done in a timely manner, and number 2, it makes me feel like I have some control over how my firm operates, and we can do it efficiently rather than this inefficiency of both of us driving 300 miles to look at 2 houses. I mean, how inefficient is that? So what I'm hoping is that from the VA side, that we can prove that the quality of the appraisal reports has remained at the same level, and because the VA or one of their SARs reviews every appraisal. So what we want to do is make sure that the quality of the report stays the same, and then we can prove to folks that say that they have this issue with risk in the lending world that the quality of the appraisals did not diminish. And so that would be something, that a win that would come out of this. And I think James could talk about that, how they're reviewing these, because it's not just that we're letting people do this. So we need to make sure that the quality of the appraisal reports is good or better, because maybe these people are trying harder because they want to get on the panel. But I would turn that over to James to
Let me add to that. That's exactly. So this is an item that pops into what we call work bucket for us to review. And so we look at these, and we find there's more detail, because you have 2 people, and now it's not just the appraiser using a cloned report, sending it out. There's 2 people signing. And so when you have 2, I'm starting to see, and I'm going to use Pete for example, when Pete has another appraiser write the report, and that appraiser's writing it, knowing that Pete's going to review it because he's signing as the supervisory appraiser, it's almost like another additional layer of review. Hey, did you catch this? Did you check that? And the first appraiser's writing for someone that they know is going to read it. And so we're actually seeing the reports are actually better. I'm liking the product. We don't see issues with it. We would like to see more. The one caveat that we do, and Pete, when you said you like to say 100%, so would I. We do restrict this for very high value properties and extremely complex and new properties. And the reason why new properties, oddly enough, because contracts sometimes are very elaborate. Sometimes those contracts have a lot of, I just call red herrings. There's just a lot of numbers going on. And we believe that's best for one person to sit down and analyze everything. So that may change for new properties, but we do feel that when it's a complex assignment, we want that one appraiser to go look at it. And I just reserved that right because it's new. And I felt that that was the right way to navigate going out the gate. We may modify that downstream when we see more data come available. Well, obviously we're a data-driven decision-making industry, but out the gate, I wanted to reserve some of those more complex properties for just our VA appraiser. But yeah, we're seeing great product. We're seeing a lot of collaboration. My view is slightly different than Pete's view. My view is I want veterans served in all areas, and I would like to see it a little timely. And I think that just inherently, we could home grow a lot more appraisers. I think that there's the discussion. I don't believe that discussion's valid, that we have a shortage of appraisers. I think the discussions amongst ourselves, people in the industry, we have a shortage of appraisers in rural areas that are underserved. So I think this helps. And I think that when, and Pete, I'm going to keep using you for example, that when Pete can bring in a trainee and teach that trainee the VA way, in the appraisal way, that we can also grow ourselves another VA appraiser, because there's going to be a time Pete's going to retire. He may be 94, but there's how we're all going to retire. But no, we just see this as a huge win-win-win. This is the trifecta of it's good for the industry, it's good for VA, and it's good for veterans.
So James, let me ask you, you have a small sample size here, 4% as of July, involving this product. Are you seeing anything relating to the timeliness issue within that subset? What kind of quantification can you provide to us on that?
We're still doing the deep dive on the timeliness. Again, it's a new product. We have a lot of other aspects of it. And being new, it's kind of hard to say what questions do we want to ask. And we're going through this waterfall effect of how do we dissect this and what's important. Because we find some that are very fast, some that are not so fast, but then you actually look at the assignment and you realize, well, that's the appraiser had to get another appraiser to go 400 miles. So there's some timeliness there, but we don't know. That may have been an unassigned case where we couldn't have served that veteran. So there's some factors in looking at it. It's hard to pinpoint the common denominator. Every case we look at seems like it's unique. And so we're still trying to populate that data and arrive at some conclusions.
That's fair. So go ahead, Pete.
Well, I would also say that in the strangest of times in 2020 was when the VA rolled this out, is probably not the best indicator of what, because we don't. I know that James said there was a bunch of appraisers that were sidelined for a couple months that just said they weren't going into people's houses. So I don't know that this is the true and accurate reflection of how it rolled it out. COVID hits, we're doing, we lose some appraisers that say they're not going to homes. I'm not sure that this is a best and accurate reflection of what the model of this could look like, and hopefully we can get some better data next year.
Absolutely, yeah. Depending on your outlook, it could be either the best or the worst time to try to innovate in the midst of a pandemic.
And on top of that, we're allowing exterior only inspections during this time, just like all the other agencies. And so I guess at the point where it's like, if I'm only doing exteriors, is there a need to bring on a trainee? So it is an awkward time to roll a product out and say, what's the actual impact of it?
Yeah, it's early in the game.
If I could introduce just for a second some of the thoughts on the veterans outreach side, I just wanted to kind of expand the topic just to broadcast something that's near and dear to Pete and I's heart, is that we see this as also as a tool for veterans outreach. And if we could bring a veteran in as a trainee, I would like to see that veteran work as a trainee in this AAP process. And once they become a licensed, that we would automatically put them on the VA panel and give them their own workload, on a caveat that they still have to work under a VA appraiser to gain the 5-year competency that we require. And I think that's the game changer, because as we talk about why aren't appraisers bringing on trainees, the people who are having the conversation haven't trained an appraiser in decades. And so when you look at it, say, well, why am I training my own competition? There's no financial incentive for me to do that. This would create the financial incentive. And on top of that, VA has programs where the veteran trainee can be paid a journeyman's wage. Now we got a lot of room to work. Pete and I working on this, but this will be game changer. It will be a game changer when VA and Foundation, we can roll something out. So we're always looking for people to partner with and help us out with that, Bill. So if you know anyone.
Well, we do too. We definitely have interest in helping on that front, and we have our own resources that we can bring to bear from the education standpoint, of course. And we have a couple of chapters that are GI approved as education providers, as but one example. And we would be very interested in discussing how that can be expanded and made more available to veterans, and the use of those funds. That the process is, let's say, unique to become an approved education provider under the GI Bill. And I know that several of our chapters, even our national organization, have looked at that and have run into some difficulties from just a applicant's standpoint, and the administration of it too is there's some challenges with it. There's a lot that goes into it, and I understand that the department has recertification requirements now for the education providers as another example. So if you're going to go into this, you have to treat it very seriously. It's got to be a long-term proposition, and you have to put resources toward it. But we have at least one chapter who's been relatively successful in orchestrating or navigating some of those waters, and we're talking about how we can model that and expand it and open that up to a broader range of veterans.
One of the things that we're doing at the foundation is that through our college and university approval program, we are now specifically targeting universities and colleges that have a robust ROTC program or are tied to the military. So when they do graduate, they already have the educational requirements under their belt, and then we can focus them on this particular program to help try to find a mentor, to help entice a mentor to take them on, because they can do independent work. They've already got the education. So we're focusing now on trying to get some of these universities and colleges approved that have these GI or ROTC programs, or our direct military schools as well. So we're making a concerted effort to reach out to them.
Excellent. Let me ask you, from the Montana board standpoint, what are you seeing as far as trainee dynamics, any evolution, trends in the trainee market?
No, it's non-existent here, and that's the trouble in a lot of rural states. And so on a quarterly basis, we probably only license 1 to 2 appraisers a quarter, so 4 or 5 a year. And there's only 400 appraisers in the whole state of Montana to begin with. That's not unique. I mean, that's like the Dakotas or Wyoming or Maine or any small market. And so this really hasn't had any effect, and I'm hoping it does once we get the word out there. And so as an example, for me anyway, I used to drive to this state capital once a week to do VA work. That's where the big VA hospital is, and so I would drive there every Wednesday. Well, I haven't driven to Helena in 6 months because my employee lives there, and she does all the VA work for me. I think I assigned 75% of my appraisals to her that are allowed, and most of them are. I mean, I rarely get an appraisal assignment through the VA that says they don't allow, or this lender doesn't allow the program. And so it's really worked really well for me because I can focus on different areas of my market. My employee is more productive because she's in that market and doesn't have to travel. And so from that perspective, it's worked out terrifically for us because we've expanded our territory and it makes me more productive as an appraiser.
You know, Bill, when I was talking about analyzing the data, that's what we're trying to start to dive down is there a particular lender who is or is not utilizing it? And so we're starting to see some indicators that in some markets that we're finding lenders who lend predominantly, for example, I don't know, but if it was Montana, we're starting to see some lenders are more saturated in certain areas. And so while we look at the data, we look at it across the board. If it's linear, it's not. We know that there's pockets where it's being used more than other areas, and so we're trying to get this to be more even kill across the board. And so, and that's part of the data. Say I wouldn't want an appraiser in, say, Florida or Arizona, say I want to take on a trainee and be part of this AAPP, but the lenders just in that area are not utilizing it. So we need to, that's what our next focus is define those areas where we have a need and the lenders are saturating that area. And then we'll be able to spot target and focus our efforts more strategically rather than a broad scattergun effect.
Sure. And analyzing the 60% of the lenders who may not be using it today, have you gleaned any insights as to what may be going on there? Are there larger macro issues involved?
So we're seeing it's kind of a risk tolerance. Speaking to some of our larger bank lenders, it's the trainee aspect. That's the heartburn that they're seeing. Their internal process, they will not utilize a trainee. And how we look at from the VA's perspective, we look at our veterans as they're our clients. These bank lenders look at the lenders as their clients. And so they're depositors for these large banks. And they look at their depositors and say, this is my client and I want to protect my client and I don't want a trainee to go into their house alone. And so I understand that. And I really respect that. And I don't know if I would take that away and force a product on them because it may force them to not lend to veterans. And that's not what we're here for. We want veterans to be able to choose a lender of their choosing. And so we need to have, like I said, we need both our stakeholders, appraisers and lenders, equal share and equal play in the industry. But I think that, when Pete was saying, 24,000 loans a month are allowing the AAPP process, allowing appraisers to use that work. By my estimates, that should support 800 trainees nationwide. It's a lot. And I think that even if it's not a trainee, I think if you're in major cities like Atlanta, where it can take you an hour and a half, 2 hours to travel across the city of Atlanta, find another VA appraiser on the other side of Atlanta. You can cut your drive time down. There's 4 hours turnaround time in drive time. And I think that there's a cost savings of wear and tear in your vehicle, your fuel time. If there's a reinspection involved, I think it just makes sense.
Is it fair to say or surmise that the 60% of lenders who may not be using it today are not using it in the conventional market as well? Or is it like an overriding policy within the bank?
I don't know. I don't know how to answer that question, Bill. It may be something we need to look at and then go address it with them directly. I do know we have, the despairing margins, we have well over 1,500 lenders that participate in the VA program, but the majority of our loans are consumed by the very few. You have the Rocket Mortgage, you have the Navy Federals, the USAAs. So we would want to target and look at those larger lenders and say, what is it that you see? What is it that you do or do not like about this program, and how can we get them on board? I think that'd be time well spent rather than chasing the lender that does 25 loans a year.
Yeah,
Well,
it makes perfect sense.
One of the things that I reached out to a couple of the market presidents here of the small independent banks. And so I specifically asked them, I said, I noticed that you don't use this. And so it was kind of shocking to me that the large agencies like USAA and Navy Federal and Quicken are using it, and that there's a couple of these local banks that do a ton of mortgage business here, and they weren't using it. Well, I was shocked by the answer. Well, we didn't know. What are you talking about? We don't know what it is. How does that work? So I don't know what that screen looks like, what that process looks like on their end, like when they order the appraisal. Like, is there, because they're probably using an internal orderer, somebody to order that that has been doing it the same way for years, and so maybe bypass that question. I don't know what that process looks like. And so I think one of the things that we could do is reach out to the independent bankers associations to notify them, to let their rural small banks know that this is available, and I think that would help as well. So two of my large lenders, I mean, large lenders for me, they're local banks. They do about half of my work. I do about half their work for them. Didn't understand how the process worked, and so then they ran that up the flagpole to their board, and all of a sudden now they're starting to use the program. And so it's just education, I think.
Yeah. Yeah, we can leave it there, and if there are any additional thoughts on how we can help with that education front, please let us know. Obviously everybody's dealing with some interesting times right now, but this is one that seems to make a lot of sense from a financial and economic standpoint that ought to be leveraged more, and we want to be helpful in helping make that happen. Any concluding thoughts, guys?
You know, I just want to say, Bill, again, thanks for bringing this up as a topic. I don't know, every time I go to one of the AI conferences, I'm amazed and astounded by the number of your members who are VA appraisers. I think I'm the fortunate one. I believe, honestly, that pound for pound, dollar for dollar, that the VA panel has some of the best appraisers that the industry has to offer. And so I'm the receiving benefactor of that. And I just want to say thank you for what you all do. And again, in behalf of senior leadership, thanks for always being there for VA and supporting us. We always appreciate what you do for us.
Thank you, James.
And
I would say too, just real quick, you know, looking at this, the Blue Water Act and the other discussions about hybrid models and the like, we obviously have looked at the VA as a real standard setter in this space, and really want to see this be successful. In light of some of the alternatives, it's a far better, far preferable arrangement in the long term for the health of the appraisal profession. So we really appreciate your leadership in ushering this in.
Thanks.
Pete, go ahead.
I just wanted to say thanks to the AI for having James and I on today. And from the Veterans Outreach Task Force of the Appraisal Foundation, we look forward to any participation from the Appraisal Institute in our mission to get veterans in the appraisal profession, or the valuation profession, I should say, because we're getting a lot of interest in personal property appraisal questions from veterans as well. So we appreciate the AI taking the time to visit with us today about this, and I think there's some real opportunities down the road and some partnership relationships that we can work on increasing the use of this program and getting veterans in the appraisal space.
Yes, thank you, Pete. Those conversations have been very positive and very exciting between the Institute and the Foundation, and including this issue too. So we look forward to the ongoing conversation, and eventually some actual tangible work products where we're collaborating. So I appreciate both of your time, and that's it for today's AI Answers. We will see you next week. Thanks again to James Heaslet and Pete Fontana to talk about the VA trainee issues and the assisted appraisal processing program. Have a great day, everyone.
Thank you.